What's up, guys, and welcome back to another video. In today's video, I'm going to go over volume. I'm going to talk about the importance of volume, how volume affects day trading. I'm going to try to make this video as simple as possible, so it will, so the newer people will be able to understand it, as well as go into a little bit of depth towards the end, so the people that have been around a while maybe can get something off of it as well. As always, if you like the video, be sure to give it a big thumbs up. Sub to the channel so you know when I'm either posting a new video or going live. So let's get right into it. Okay, so first off, I want to get into simply what is volume. And volume comes from trades in a specific stock. So all the buys and all the sells combine to come up with the volume number. You will see these volume bars at the bottom of charts. I'm sure if you've looked at charts before, you can see these different volume bars. Sometimes you'll see them to where they're a little more detailed like mine, to where they have green and red. So they show you kind of the overall, was this candle overall buying volume or was this candle overall selling volume? So volume is just the total number of trades within a specific time period, and it counts as buys or sells. So all the buys combined and all the sells combined equal the total volume. So when you see volume on a stock like NRXP, and I'm using this for an example because this was a runner on Friday. All throughout pre-market, you see from 4 a.m. all the way to open, it's usually overall lower volume. The trading volume's lower, the market's not open yet, it's still pre-market. Now, as you see out the gate, NRXP got a lot of volume. So it ramped up on volume as the market opened. It got several 100,000 all the way up into the millions of volume, and you see the stock continued to follow through. Now, this stock had, I think it had some type of news on Friday or some kind of correlation on Friday that made this thing run up towards $1. And as you see, the overall volume and the overall relative volume was higher. And when I say relative volume, I mean it's higher than it averaged before. So if you go back and look at the stock previously on times that it had moved, you can see that the volume over here was way lower. And I can go back even further. See how it wasn't even hardly moving? There was barely any volume down here. It was way lower than when it actually had its run on Friday morning. So you see that the relative volume was extremely high on NRXP, and that caused it to have the big run that it had. Now, relative volume is a key when it comes to runners. You want to see above average or a higher relative volume on things for them to have breakouts, for them to follow patterns, for them to have follow through. As in when you go to, let's say, and I always use this one for an example, like the stock RKDA, and I can even go to the 15-minute chart. Sure, you see these volume sticks here, but they're like 20,000. Like the volume is very, very low, and you can't expect a breakout to happen on a stock where the volume is just non-existent. Even on the daily, the volume on a stock like this is just extremely low. And you look for days that they're higher than average, like back here in May or back here in March. Those above average volume days were the days that they actually had moves. On the low relative volume days and when it's not very active, they're not going to get much moves on that. And especially, and usually a PR, which is a press release, so a company gets brand new breaking news, or say sector. So let's say like agriculture sector, and that's the reason this ran before, because RKDA specifically is agriculture. That sector is in play, so a lot of the stocks from that sector are moving higher and higher. You get the volume into this, but usually, and especially in this market, since it's been a little bit worse of a market this year, you don't really see things moving up or getting higher than average volume unless there's news or a reason for it to move. So when we get into relative volume and stuff like that, it makes me want to talk about things that are thicker. So when I say thicker or thinner stocks, that refers to the float of the stock. And the float of the stock is the number of shares that are outstanding in the market. So a lower float stock would have less shares. So overall, the bids and the asks would be thinner. So it takes less volume to move the stock. So that's where relative volume comes in. You need to look at relative volume for that particular stock. Not just, oh, this stock's getting 10 million volume today. That's extremely high because it could be averaging 10 to 15 million volume every day because the float's higher. So like Mullins, for example, it is a thicker stock. It has a heavier float. I think it's in the hundreds of millions in float. And it gets volume, let's see, every candle is close to 500,000 to a million. But it's not moving in that range. As we saw in NRXP, those volume candles that were 500,000 to a million were sending it up several percent, from 80 to 90 to a dollar. And on Mullins, since it's a thicker and heavier stock, the average volume is higher just because the float's higher. So you need to look at days that are higher relative volume overall. So days that are above the trend. So you can see like on the chart, and my plus and minus gets in the way here, but the average volume per day on Mullins is like 130 million or something. And any day that goes higher than that are usually the days that it likes to break out. So higher, above average volume. So it's key for things to not just have, high volume or low volume, but to have higher than average or relatively high volume. That's a big key factor in the fact of things actually moving. So if you're getting low volume relatively for the stock, say like a day that Mullins has 17 million, it's not going to make much of a move at all. Just because the volume on that is so low compared to normal, it's not going to make a move. So the key factors are, one, are you dealing with a low float or a heavier float? NRXP, for example, that one is a much lower float. And it got really, really high volume. So it got 105 million volume, which looks like one of the highest days that it's had in a very long time. And this one is a lower float overall, too. So this one ran from 57 cents to $1. Ran 100% within the day on Friday. And that doesn't happen very often, especially after the open, seeing a runner. Sometimes you'll get a company with news, and it'll pop up real quick, and it'll be up 50, 60% already, and then run just a little bit more, and it's already at 100. But this one had a true, 55, 60 cents to $1.05. That's a true 100% intraday move, and it was because the volume. It wasn't because, somebody was pumping it or whatever else. It had high, it wasn't just a quick spike. It had high volume that sustained out. And as you see down here, as the volume started to fade, the price was still holding up for a moment, but the volume just continued to fade off, and it didn't have enough to continue the breakout. So as this volume lowered down throughout the day, so did the price, because there wasn't enough volume behind it to keep it going, or to even hold it up for that matter. There was enough sustained volume for a little bit to keep it up, but then as it fades, or as the volume fades, so did the price. So you see that a lot, and that gets into a little bit deeper as you see like convergence and divergence, and that's some more complicated terms, is when you see price going up or holding sideways, but the volume is decreasing. I believe that's called divergence, and that's a negative thing that you look for within volume and price action, is when you see divergence near the top, you're going to expect a pullback. So that's a little bit for the more intermediate to advanced guys, is when you see lowering volume but continued higher price, that's usually a negative thing. There's no volume behind the move, I guess you could say. And let's go to something even bigger. Let's say Apple, for example. Apple, and yes, it's a more expensive stock, but the float is insanely heavy. Apple averages about 100 million volume a day, which is insanely high, but it doesn't make astronomical moves because the float's so heavy. So on days that it has the very high green volume, like way higher tick, are the days that it's moving the most. But overall, the volume is very high on this, but it's not making much of a difference because the float, for one, is heavy, and it averages that much volume anyways. So that's something, all those keys to look for. You look for your float to see how heavy the stock is, to where it's going to normally have higher average volume. And then also you look at the average volume to see if, let's say, a smaller float can have a higher average volume as well. So if, say, XYZ stock is a 20 million float, which is thinner, but it averages 50 million volume a day, which wouldn't happen because that's like a full float rotation. But if it averages that much volume a day, then anything in that range isn't going to move it much because that's just a standard regular day for that stock. So there's a lot of factors when it comes into volume, but the key ones are going to be looking for higher relative volume on your breakouts, and looking for the float and things of that nature. So SIGA, for example, has been running for days and days and days. It had the higher average volume, relative volume, the first little bit of its run, but as you see through this range, it was super low. It was very low compared to the first breakout. And it was going higher some, going lower some, going higher some, but it wasn't really breaking out. But then you see once this day hit, this high, super high relative. So it was averaging like 4 to 5 million a day, and it had a 60 million volume day. That's when the price action really started to break out. You see the higher relative volume comes in, and then it continued from 13, 14, all the way up to $23 in 3 days, or 3 or 4 days, just because the volume overall began to increase so much that the stock finally broke out. It got its initial spurt. It traded sideways for a very long time, but when that high relative volume come in, it finally broke out. Now that can happen on the short side too. So let's say after this candle came in that we get a high volume red day that sold it down below here. Then normally the volume is going to keep increasing to the negative side, and it's going to keep selling off if the relative volume is higher for the short side or for the selling side. So it happened to work out that the relative volume was higher on the green side here, and it had a big breakout until this day. It really sold off on Friday, but it could have happened either way, and that's something to look for. Like if you're shorting or if you're seeing like continuation, if you see a red day that's high relative volume or really high overall volume, then more than likely that's the kill candle or the end of the run or that particular setup on a stock. If you guys remember when we were talking about trend lines in the other video that I was explaining, trend lines are great, patterns are great, patterns are perfect when they work out, and the technical analysis is great behind it, but it doesn't matter if there's no volume behind it. So you can have the best pattern in the world, and without volume to break it out, it's never going to go. There's never going to be a breakout. So this is another one, GovX. Let's see if I can find a pattern here to kind of explain. So this was Thursday, and I actually struggled with this one myself. This is a sympathy play to SIGA. It's a monkeypox play, and it had decent volume here compared to the day before. But it didn't really want to break out. It just kept having higher volume, and then it would go lower, and it would kind of perk up a little bit and finally sell off. And it did not want to get through like the 225, 230 level. But then you see Friday, look how much higher this volume is over here compared to the day before. It had the higher relative volume, and it's not really a perfect pattern break, but as you see, it had like a at 225 to 230 level that it was struggling with. And right out the gate on Friday, it had the higher relative volume than normal and just continued to push through. Ran all the way straight up, all the way to around 340 from that breakout. So it couldn't break it on this day, but it did kind of set up a higher low pattern, and then it broke out with confirmation here. And on a pattern break, if you see the high volume and it continues through, that's kind of your confirmation that the pattern did break out. So say, okay, it broke through here, but it kind of sold back off. As you see this volume here through here, this is your confirmation that the pattern did hold and it's continuing higher. The volume didn't slow back off. It actually accelerated and pushed this thing all the way up through $3. So volume can be used as a assurance or confirmation that a pattern did break out. So I'll draw this pattern here. It's rough, but it's here. It was an ascending triangle in the 5 minute. It rejected here, and then it pushed through on the next day. It went up, looked like it was going to fail and break down. It had a few candles here that traded sideways, which was kind of an indecision. Are we going to hold this level or not? And then you see the volume came in here, and it continued to push on up through. So it's funny because you see it was exactly what I was talking about before. The volume's high up to here, which is through this loop, and then it starts to fade off here even though the price is going higher. And that's usually a sign for a short or a sign for somebody that's trading this long to start getting out. As the price goes higher, but the volume is lower overall, you start thinking, okay, this is divergence. You need to start looking for an exit. And as you see, it got a huge red candle here, traded sideways, and then another big red candle. So as the volume started to fade, it could not hold the price that it was at. So that's just another example of, volume confirmation. But as volume starts to leave and doesn't come back, but the price continues higher, that's a good sign to, start thinking about scaling or moving your stops up along like maybe your EMA lines or whatever else, just to make sure that you're not getting trapped in one of these knives. Because this knife was from 325 to 3, which isn't terrible. It's 25 cents. But this one was from 315 all the way down to 255. So if for some reason you didn't have a stop loss in this one, you'd have lost over 60 cents just in the blink of an eye. It sold off that much once the pattern finally got to the point where it's make or break and no new volume came in. The volume was actually decreasing and red, and it finally just gave up and knifed. So I kind of wanted to do this short video for you guys as an explanation of volume, the importance of volume, the importance of relative volume, the importance of the confirmation of volume, get into a little bit of convergence, divergence. So convergence is actually the opposite. So it's like when you're going lower, but the volume is decreasing as well. So decreasing volume on a sell-off, and then it will end up turning into a reversal. But I want to go over that and try to get into, go from the basics of what these candles are, what volume is, and then kind of go as far as an in-depth explanation of what we're looking at with volume. There may be, if I can think of more topics, there may be another video I can get into, the importance of volume part 2. And I get into maybe a little bit more in-depth or a little bit deeper explanation of volume and like each individual tick and looking at the level 2 and time and sales and stuff like that. But this is overall like chart volume and just kind of overall volume for pattern breaks and stuff like that. It's important on, say, like a super high volume stock. Just because it has high volume, like I mentioned, doesn't mean just to buy into it. It can be higher volume normally. It could be higher volume because of something happening. It could be news, could be whatever. But just because something has higher volume is not just the key factor to get in. You need to look for, does it usually have high volume? Is the relative volume high? Is there a reason behind the move? Is there news? Is there sector? You got to look into these things, but volume doesn't lie. That's one of the key factors. Chart, it can lie a little bit, I guess you could say. Like you can have bullish patterns that fail, but the volume itself never lies. Your level 2 can lie. Bids and asks can always be pulled, but the volume that you see go across the tape, that never lies. So that's just something to keep in mind. And hope you guys learned something from this video. Hope I didn't ramble on too long. But I appreciate you guys. And I will be back on stream Monday morning, 8 a.m. See you then.